You are listening to chartingwealth.com for Friday, the 21st of August, 2015. Whoa, look at what's happened with the total market. This is the two-day candle. For those of you listening on audio, it is a long down candle. Actually, the market overall is down 2.09% for the day. We're looking at a two-day candle with a wick that is another quarter as long as the red down candle is. So there was an incredible amount of downward pressure and a push up. A lot happened in the market today. If we drop back and look at the half day, the 4-hour chart from the 2-day chart, you can see the market had moved through the trend line that we had previously drawn. We talked about that yesterday, crossed over going down at the mid portion of the day yesterday, and man, it accelerated this morning. It went down substantially in the morning and down even further in the afternoon. Let's see how that reflected the movement in the S&P 500, reflected by SPY. Looks quite similar to the total market. Again, a huge wick on the bottom, meaning the bears were able to drive the market way down. The bulls were able to push it up a lot farther than it had gone down. Still a big down day. Let's look back to the 4-hour chart and see what we see. You can see the same thing crossed over yesterday in the afternoon, going down as we called, and has continued to push down substantially. Now, let's see how that was reflected in the Qs. The Qs look like it might be shaping up to actually have some upward momentum, but the rest of the market sure dragged it down. It had crossed over going down on the 2-day chart and just continued to power down big time. So that is where the Qs ended us, and let's look at the 4-hour chart on that. And you can tell crossed over going down yesterday afternoon, continued. And in fact, listen back to what I said yesterday on the Qs. We talked about a good buy-in point on the Qs. That was the one to see the best for the substantial down movement after the 4-hour chart had peaked up over the past few days and then rolled over yesterday afternoon going down. If you will recall, we talked about that in a good buy-in point. And then what did it do? It rocketed down today big time. What we like to see is when, and let me revert back, a little teaching moment here. You can see how we had already charted back on the 10th and the 12th, red candles. The market had sort of petered out and moved sideways over the last couple of days, the last 4 days or so. And then, so still in a confirmed down move after the MACD moved over on the 10th. And we continued to see a divergence up through yesterday, a greater one today, of course, but Monday morning quarterbacking, like we were talking about yesterday, about a good buy-in point. And so the market was in a confirmed down move on the 2-day chart. Whenever you see a rolling back on the 4-hour half-day chart, like we saw here around the 17th, and the 14th, where it crossed up going on into Monday, where the market moved up, and then yesterday as it crossed over going down, we talked about a good buy-in point. Well, of course, look at what happened today. When you see the move in the short chart, which is the 4-hour chart here, match the move in the 2-day chart, the big chart, that is a great time to get in whenever you have both your charts moving in the same direction, particularly after a roll off in the opposite direction on the short chart, and it goes back to the movement of the big chart. That's when to get in, and where you really pare down the possibility of losing substantially. You pare that down, means you're going for the win and the money. Now let's look at what's happening with gold. We've talked about gold for days and days, haven't we? We saw it bottom out sometime around the 27th of July. We saw it move sideways, and then we called the crossover going up. Saw the MACD and the derivative oscillator flip over at the same time. Strong signal. We've been charting this, and we had a great up move in it today as the market crashed. In fact, look how high gold got. Gold got all the way up to 110.61. $4 higher than it had originally opened. If you're looking at the real price of gold, again, this is a tenth of that, so $40 on the real price of gold, $4 on ours. Isn't that fabulous? And were you following it? Were you tracking it? We talked about the 4-hour chart. Check it out. How beautiful is that? Our simple 4-hour chart crossed over on the 27th. You would have hopped in even at the high there, 105.68, and of course all the way up to where it closed at the end of the day at 110.33 as far as our reading goes. So that is where the charts were. They're now moving as they should when the market goes down, gold going up. We haven't always seen that in the past. Again, thanks so much for listening to us, for paying attention. We sure enjoy bringing all this information to you. Follow us every day. We've got a great training at the website now. We post it on Facebook and Twitter also. It is our short lesson on how to read a simple chart so that you can start practicing this, so that you can master it, so that you can make your own money in the market. It's not that hard. Just a little bit of daily commitment, and we give it to you. Join us every day. Watch this. Spend 5 to 10 minutes, and let us help educate you so you can get the skills, so you become a value investor, somebody who knows how the market works and is nobody's fool. Thank you so much from chartingwealth.com.